Welcome to CBA Financial Services Limited, Chartered Financial Planners. My name is Brian Bettison, Independent Financial Consultant at CBA. Following on from my last briefing on the National Employment Savings Trust, or NEST as it's called, which is the compulsory government workplace pension scheme to be introduced in October 2012, I'd just like to update you on a couple of points since that last briefing. Firstly, if you remember, there are two key points: auto-enrolment of employees. You must automatically enrol them into the government scheme. And secondly, compulsory contributions by the employee and the employer. We talked about a lower band and a higher band, rather like national insurance, and the contribution percentages will be based upon those figures. Well, recent figures that have now been changed are that the lower band will be in the region of 5,715 and the upper band will be 38,185. So the employer will pay 3% between that band of earnings and the employee 4%. And the other 1% will come from the revenue through tax relief. Another point to be aware of that we need to focus on, and that you as an employer need to be aware of, is penalties. Any employer that fails to comply with the implementation of this government scheme, in terms of payments, enrolling employees, in whatever way, shape or form, will be penalised, and very, very severely. For a first penalty, it will be a fixed penalty of £400. And if, for example, the error, it could be a simple error, has not been rectified, or an employee has not been enrolled, or a payment has been missed, if it hasn't been corrected within an appropriate point of time, fines of up to £50 per day to £10,000 per day will be applied. So it depends upon the size of the company and the number of employees, but that is quite a punitive penalty, so you need to be aware of that also. Finally, what I would like to talk about on the NEST scheme is just how CBA Financial Services can help you. We've been talking to our clients for the past 2 years about NEST and trying to make them aware as to how it's going to impact on their companies, and more importantly on the bottom line, the profitability. What we can do to help you, and we really need to be doing this fairly soon because October 2012, the implementation date, is coming up very, very fast, is to sit down with you on a one-to-one basis, face-to-face, and what we will do is we'll explain exactly what NEST is, how it's going to impact you financially. In other words, we can look at payroll and we can calculate what your 3% is going to be on an annual basis and what the employee's 4% is going to be. And it's not just basic salary, it's bonuses, etc. All that will be taken into account, overtime also. So we'd then be able to say, look, this is how much it's actually going to cost you at the bottom line of your budget. And also we'll be able to explain how it's going to impact you in terms of administering the scheme, because you will have to administer it, and that will cost in terms of money and time, and that's valuable time taken away from the running of the business. We'll also be able to explain to you the two options: either implement the government scheme if that's right for you, or put in place a qualifying pension scheme as an alternative. No negotiation on the contribution or auto-enrolment, that is an absolute must, but it's an opportunity to put in place a scheme that you control, and that somebody like ourselves at CBA, we can manage for you, we can administer it for you, and we can ensure that you comply with all the rules, and you control it, as opposed to a government scheme which you will have to react to the government regulations. So we can do that for you, and another benefit of sitting down with ourselves here at CBA is we can explain to you how you can cut down the financial cost quite substantially, actually, through an opportunity called salary sacrifice. And I'd like to talk about salary sacrifice just for a couple of minutes, and we can maybe explore it in more detail if you want to meet up with us here at CBA. Salary sacrifice has been around for a few years. We've been discussing it at great length with CBA corporate clients for the past few years also. A lot of employers haven't really utilised it because I don't think they're very aware of it, and that's maybe because a lot of advisors to corporate clients haven't taken the time to explain how it can benefit you. But it's an excellent opportunity for you to reduce the cost that you're going to incur in 2012 in October when NEST is implemented. How does it work? Well, quite simply, if I can use an example, say my gross salary as your employee was £24,000, I would voluntarily take a salary cut of, let's say, £4,000, so my new gross salary is £20,000, and the benefit of that is that instead of paying me 24,000, the other 4,000, you, the employer, would pay that directly into my pension scheme. So if, for example, I want to have 4,000 paid into my pension, instead of me taking my salary gross, paying tax, paying national insurance, and then putting the money back into a pension scheme whereby I would only get my tax relief, it will be done directly through salary reduction. So how does that benefit me, the employee? Well, actually, I would save my national insurance contributions on that pension contribution because it's paid direct by you, the employer, so I don't pay national insurance. So whilst it's a bit of an anomaly to an employee to take a salary reduction, actually net pay would be better for me. How do you, the employer, benefit? Well, quite simply, you're still paying out 24,000, 20,000 as salary, 4,000 into a pension contribution. So 24,000 is a business expense against your corporation tax, obviously. However, you also will save the national insurance contributions on the salary reduction. Now, what we found that the corporate clients of CBA have done is they've either kept that and used it to bolster the bottom line, the profitability of the business. Some have actually given it back to the clients and put it into the pension scheme also to enhance the contribution, or a mix of both, kept some and put some back into the pension scheme. But we believe that salary sacrifice would be an excellent opportunity for you, the employer, to start to underpin some of the future costs that you're going to have to contribute to this Nest pension scheme in 2012. And you can use it to help finance that 3% that you will have to pay. CBA will be able to provide you with full information on how salary sacrifice could work for you, quantify it, show you how much national insurance contributions would be saved on an annual basis, and how much that would help to contribute to your 3% Nest contribution. If we can be of any further help, then please don't hesitate to contact me. That's Brian Bettison at CBA Financial Services on 01482 881919, or just email me at bbettison@cba-partnership.com. Thank you very much.